Gold, it's sinking today, hitting its lowest level in more than a month. But could this be a bullion buying opportunity? Welcome to Trading Nation. I'm Eric Chemi. Today we've got Larry McDonald from ACG Analytics and Boris Schlossberg with BK Asset Management. Larry, let's start with you. What are your thoughts here on gold?
Well, one of the things we've been pointing out to our subscribers of the Bear Traps report is gold is trading over the last 2 years more and more like a bond, like rates. In other words, the sensitivity of gold to interest rates is at multi-year highs. And you want to buy gold. If, the last 2 times, if you bought the gold miners, for example, when the Fed was hiking rates, you made on average 30% over the next 6 months each time. So you want to buy fear, you want to buy the surprise rate hike. A lot of people on Wall Street were not expecting this hike, so it surprised the market. And you want to buy gold miners into rate hikes. It's a good strategy. We think it'll work this year.
Boris, do you think that's a good strategy?
No, I'm actually hesitant about buying gold. I think gold is in a secular bear market, and it's a sell the rally trap, precisely, I guess, for the reason that Larry's talking about in terms of rates. Rates are going up. Gold is losing its luster because it's a non-yielding asset. And gold only comes into favor if you have either serious inflationary fears or massive political risk. If those 2 things are off the table, I think gold just dribbles lower as we go forward.
Larry, I got to let you get back in there. Defend yourself.
Well, the one thing we've learned over the last 3 years is the economy is not strong enough to take sustained rate hikes. I know everybody wants the Fed to hike in an aggressive path, but every time the Fed has signaled, excuse me, an aggressive path, they've backed away. And this year won't be any different. They're going to try to signal more hikes. That's what's causing the stress in gold. And when they back away, which they have in 2015 and 16, when they back away, that's where you get your 10, 20, 30% pop in gold miners.
Boris, and we'll just end it with you.
Yeah, I think, Larry is right if that's true. But this time I'm taking the Fed at its word because Janet Yellen has turned hawkish. And when she has turned hawkish, you got to trust her opinion. I think the Fed is on a path to hike rates 3 times this year. They've been very, very consistent about that. And if that's the path, gold goes down.
I guess we're going to have you guys come back on a month or 2 from now, see where it all stands out. My thanks to both Boris and Larry. Thanks for joining us here on Trading Nation. And thank you for watching. I'm Eric Chemi. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.